And I guess, I lost a little money invested in whatever record stores, but I also bought some Apple stock and made a fortune, right? And I would say all these corporate operators, their job is, look at anticipate the future, look at the past, move forward, do it in the most graceful, civil, responsible, elegant fashion you can, right? The world isn't the way it was 100 years ago. It won't be this way 100 years from now. That's the human condition. If there wasn't work to do to move us from the past to the future, you wouldn't have a job. There'd be no reason to get up in the morning. There'd be nothing to get excited about, right? You're irrelevant. And I got to tell you, you don't want to wake up one day and think, I'm irrelevant, nobody needs me, no one will care. And the way we did it for the past 100 years is probably just the way we should do it forever.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Michael Saylor dives into how Bitcoin is transforming global capital markets and shaping the future of wealth creation. Let's watch and learn.
If the interest rates fall 100 basis points, Strife could trade up 10 or 20%. And that's not because it's failing.
Right.
And if, when Jerome Powell gives a speech and says, I don't really think we're going to lower interest rates as fast, so Strife trades down $3, $4, $5, 10, it could trade quite a bit because of what Jerome Powell said. That's not a failure of our instrument, you see.
Right.
But you understand how much more complicated it is to explain that Strife reacted rationally to the forward yield curve expectations?
Right.
Whereas with Stretch, I don't have to. With Stretch, everybody knows the mission. It's like we're pegging it to be between 99 and 101. Like we're targeting for 99 to 101. And the way you'll know that it's in the range is when it's between 99 and 101.
Yeah.
Right? And when you
Success is defined.
Like my goal for Strife is I want to see it trade to 150 or 200. Right? You can imagine a world where Strife is way over collateralized. The risk-free rate in the U.S. is 2%. We have a 300 basis point credit spread. Strife trades with an effective yield of 5%, which means it should trade at 200. You see, that's success for that. But you understand how much more complicated that is?
Right.
Because what if it gets to 200? Well, we're going to be paying an effective yield of 5%. We'll be selling it at 200. But now what happens if you buy it at 200 and interest rates get jacked 2% and it trades down to 160? Did it work? Yeah, exactly as designed. Is a retiree going to be irate? Yeah. Like, wait a minute, I got 5% more, 3% more, but it traded down 20% or something, and that's not what I signed up for. So you understand, that looks scary. Yeah. Those long duration, high delta instruments look scary. They're very exciting for people that are professional investors. But we talked about the iPhone moment. I mean, it's iPhone is kind of maybe not even the perfect metaphor. I mean, the perfect metaphor is a comfortable retirement. It's like you pick up the phone and call your dad and you say, hey, Dad, you have some capital in your 401k. You put in the Stretch. It was paying you $32,000 a year. You put in the Stretch, it's going to pay you $125,000 a year. What's the risk? Okay, well, there's no risk. Yeah. Okay. I mean, there's risk, of a security, but the point is, it looks like it's 8x over collateralized or 5x over collateralized, which is more than investment grade companies offer you.
Right.
So it's investment grade comparable risk.
Yeah.
If you believe in Bitcoin. If you hate Bitcoin, Dad, don't take it.
Yeah.
But if you think the Bitcoin is okay, I can jack your retirement income from $30,000 to $120,000 if you do this.
Yeah.
Well, what do I have to do? Nothing.
Just buy it in your equity or brokerage account.
Bitcoin's market value to realized value MBRV ratio is flashing a strong signal that a cyclical bottom could be forming below $110,000, hinting at a potential rebound ahead. Analysts believe Bitcoin may be entering an undervalued phase, the kind that historically leads to major rallies. The MVRV ratio, which measures whether Bitcoin is over or undervalued compared to its realized value, recently dropped below its 365-day moving average. According to crypto quant analyst Cheyenne Markets, this level has consistently marked strong buying zones in the past. When this happened in mid-2021, June 2022, and early 2024, Bitcoin went on to surge by 135%, 100%, and even 196% respectively. Currently hovering near 1.9, the MVRV ratio reflects reduced speculation and growing long-term confidence, even after Bitcoin's recent drop to around $103,530. If this metric starts rising again, it could confirm that the recent dip marked a cyclical bottom, paving the way for a renewed bullish phase into Q4. Meanwhile, capital is beginning to rotate out of gold and into Bitcoin. With gold down nearly 8.5% from its record high, analysts like Michael Vandepop suggest investors may be seeking higher risk, higher reward opportunities in crypto. If this trend continues, Bitcoin's next leg up could push prices towards $150,000 and possibly beyond, especially if upcoming economic data supports rate cuts and the risk on sentiment returns to global markets.
A lot of 80-year-olds don't use an iPhone, right? A lot of senior citizens have a hard time using technology. No one has a hard time collecting a pension. So what we're really talking about is creating a living stipend or creating an annuity or a pension. And so what's the offers like happily ever after? It's Social Security. That's the product. For how many people? Like a billion? Like everybody, right? It's basically Social Security and living happily ever after for a billion people. What do I got to do? All you got to do is just A, understand Bitcoin and trust it. And then B, you got to trust the company or the security that you're buying. But once you get over those two barriers, what'd you get? It's like, how many people would like their salary to go from $30,000 to $100,000 a year?
Everyone.
So you understand why I would say that's the simplest product to sell.
Yeah.
Because it's like the other ones lead you down a path of explaining conversion rates and delta and duration, interest rate risk, and it's just, and the like, and what happens if the central bankers say this and do that, and you might get this boost, but you might not get that. And it's like, it's a lot more complicated. And if you create something which is simple, that means you'll sell 10 to 100 times as much of it, right? But if it's 100 times as much you sold, it's going to be 100 times as liquid. If it's liquid, it means you get in and you get out, right? So what we're trying to do is, and that means there's less volatility. So at the end of the day, the simple universal product that everybody needs that's the most liquid with the highest AUM. You see, my criticism of the preferred stock market and the corporate bond market is they were never trying to create good credit. It was always crippled credit. It's like, why doesn't a big bank have $100 billion worth of a single preferred instrument with a 4-letter ticker that trades $5 billion a day with a bid-ask spread of a penny? And I guess, I lost a little money invested in whatever record stores, but I also bought some Apple stock and made a fortune, right? And I would say, all these corporate operators, their job is, look at anticipate the future, look at the past, move forward, do it in the most graceful, civil, responsible, elegant fashion you can, right? The world isn't the way it was 100 years ago. It won't be this way 100 years from now. That's the human condition. If there wasn't work to do to move us from the past to the future, you wouldn't have a job. There'd be no reason to get up in the morning. There'd be nothing to get excited about, right? You're irrelevant. And I got to tell you, you don't want to wake up one day and think, I'm irrelevant. Nobody needs me. No one will care. And And the way we did it for the past 100 years is probably just the way we should do it forever.
Finding coins before they get listed on Binance or Coinbase is like discovering hidden gems before they shine. Traders who master this skill often gain a serious advantage, as token listings on major exchanges usually trigger massive price surges due to higher visibility and liquidity. The key lies in combining AI tools, on-chain data, and social signals to identify early momentum before the crowd catches on. AI platforms like ChatGPT, Perplexity, and Arkham Intelligence can now scan blockchain data, social trends, and sentiment faster than any human. They help detect unusual buying patterns, rapid community growth, or sudden mentions across social platforms. Keeping a close eye on communities across X, Reddit, and Discord often reveals early hints of hype, while launchpads like Seedify or DAO Maker highlight tokens preparing for initial DEX offerings. On-chain explorers such as Etherscan and SolScan show wallet growth and smart money movements, helping confirm whether a token is truly gaining traction. Meanwhile, tracking Binance's Innovation Zone or Coinbase's Asset Hub can hint at which projects are next in line. Combining these insights with AI-driven analytics allows traders to spot trends early, turning data, community signals, and timing into powerful tools for finding the next big crypto breakout. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.